All right, welcome everybody to another episode of VALR Unfiltered, Money, Meaning and Society. Now, we haven't recorded in a while, but today I'm very pleased to welcome Shelley, Havemann and Peter Mwangi. Both have recently joined VALR in different capacities. And today we're actually going to talk about mobile money in Africa and how it relates as well to crypto and to payments and to kind of where it's going in terms of the financial space. So I'd very much like to welcome you. Maybe Shelley, you can introduce yourself a little bit and we'll go to Peter afterwards.
Sure. Thank you, Ben, and thank you very much for having me. Super excited to share some ideas here. I'm Shelley Havemann. I'm based out of Cape Town, South Africa. I am head of payments at VALR, specifically tasked with setting up our payments business specifically. We sort of organically grown into facilitating payment flows, and we're now at a stage where we want to productize and commercialize it properly. I have about 20 years of experience in various different roles around payments and financial services at large. Specifically in the TradFi industry, and then in 2020 I made the jump into crypto. I worked for a crypto bank that was sort of licensed on both ends, and just fascinated with the technology and the possibilities that it brings. I think what really drew me to VALR was the idea of democratizing access to digital assets, also to those of us who find it more difficult to access these and then get access to global markets. So really interesting for me to be solving real problems for people that I can relate to and am part of. And super happy to be here too.
Wonderful. Thank you very much for sharing. Also, Peter, it'd be nice to introduce yourself.
Hi Ben and Shelley. I'm very happy to be here. My name is Peter Mwangi. I just joined VALR 3 weeks ago. So I'm building VALR here in Kenya. So I'm in the process, of speaking to various partners here in Kenya to set up the VALR business here in Kenya. So I'm looking for as many partners as possible that I can have here in Kenya. I've been in the fintech industry for the last more than 10 years actually, and in the crypto space this is my 4th year. But my experience in crypto spans about 7 years. So yes, I'm happy to have the opportunity to build the VALR business here in Kenya. So I own the business vision here in Kenya, and I'm looking forward to ensuring that VALR is actually the biggest, most successful exchange here in Kenya. I'm looking forward to have this discussion about VALR, mobile money integration and mobile payments here in Kenya. As you know, Kenya is the capital city of mobile money and mobile payments in Africa. So I'm looking forward to our conversation today.
It's wonderful. Actually, both of you in different ways represent part of an expansion strategy for VALR. On the one hand, we're moving into payments, and on the other hand, we're steadily moving into Kenya. So it's quite exciting. Peter, maybe we can start with you just as a question, more general, but you obviously know a lot about the Kenyan space. So for you, currently, where we are now, what stands out to you in the Kenyan market in terms of digital finance?
That's a good question. So my experience with digital finance, and I'll just speak a little bit about the history of it, because I came of age when digital finance was just beginning to grow in Kenya. So my experience with digital finance, especially mobile money, started sometime in 2008. 2007, 2008, so I had just finished high school and joined college. So in those days, whenever I would need pocket money, my parents would have to travel like more than 70 kilometers, actually 77 kilometers to be precise, to come and visit me and hand me over cash. And I still remember that time I tried to open a bank account as a student, and most of the banks turned me away. So they wouldn't allow you to open a bank account as a student if you cannot show that you have a constant income. So you have to be employed to have a bank account. So they denied me a bank account. So my parents would have to travel 77 kilometers to give me money from time to time, and it was very frustrating. But then something happened during that period in Kenya. We had the post-election violence. So, people didn't like the outcome of the election. There was violence all over the country, and all of a sudden my parents couldn't travel, so they couldn't bring me money. So here I am in Nairobi, just about to starve as a student, have no money. But then I remember my dad telling me, just go and open up a mobile money account. At that point in time, I had not heard of that service. It was called M-Pesa. So I went and looked for M-Pesa, just registered. So mobile money, it's a P2P money transfer system. At that point, it was P2P, sending money via SMS. So I got it, and my dad sent me equivalent of $100 today. And I couldn't believe this. I couldn't believe that within a couple of minutes, I've received money from my dad. I've gone to a mobile money agent. I've been able to withdraw, and now I'm spending. And that's where my love story with actually mobile money M-Pesa started. I started researching it, and so much so that I was a research assistant for one of my professors. She was doing a project for the World Bank, because at that point in time, also World Bank was trying to figure out what is this M-Pesa, where has it come from? And so after college, obviously, I joined a fintech company that was actually looking at a way to issue customer to business payments, business to customer payments, so merchant payments for mobile money. So I worked with them. And then because of the way M-Pesa was growing within Kenya, many fintech companies, many tech companies, global companies were traveling to Kenya to just learn about what is this M-Pesa, how is this happening. So in my memory, I remember even meeting people from Google, people from Square. They're just traveling to Kenya to see how does this service work. Yeah, so I worked there, and also during those conversations, also I discovered Bitcoin and crypto, because you would have people flying from all over the world, especially from the US, and they would say, yeah, I think this works like Bitcoin, sort of. I think you should look at Bitcoin. So I think at that point in time, it was the first time that I heard about Bitcoin. And then, of course, about 4 years ago, I transitioned into crypto. So I've observed digital payments in Kenya grow from P2P, where we were just sending funds to each other, and now we use it for paying for goods and services, to pay bills and utilities, even to pay tax. So people use mobile money. And then another event that has led to deeper adoption of digital payments in Kenya was the COVID era, when we had lockdowns. And then we were all afraid of handling cash. So then that actually led to deeper adoption of mobile money, digital finance. People are no longer visiting bank accounts or ATMs, lining up. People pay for everything with mobile money. Transport, taxis, food, ordering. So in Kenya, for instance, for speaking for myself, I'm able to go for about almost a month without ever spending cash or touching cash. So it's deepened how we trade with each other, how we relate with each other. People have taken up digital finance in how to get loans for smaller businesses, for individuals. So we are using that to build our credit. And actually, a research that was done about 10 years ago showed that mobile money, digital payments, it upgraded about 2% of the Kenyan population from extreme poverty. Because then what digital finance does is it allows movement of resources from the high income earners, most of them in the city, to communities in the rural areas. So it has had a massive positive impact, especially in Kenya. And in Kenya, I think about 90% of us use mobile money, active users every month. I think the regulator released some data sometime at the end of last year, and they showed that on average, Kenyans do a total of 250 million transactions every single month via digital channels, about $5 billion every month. So it's become part of us and part of how we do everything here in Kenya. And the same thing can also be seen across East Africa. So I think now digital finance, especially through mobile money, and as I mentioned at the beginning of our call, Kenya is sort of like the capital city of digital finance and mobile money. And there were several factors that led to that, actually. And one of them was there was little penetration of banking. Like I mentioned at the beginning, I tried to open a bank account as a student and I couldn't. So because of that, mobile money comes in and it allows a lot of people to sort of leapfrog straight from traditional banking into digital finance without needing to open a bank account. So that happened, combined with the post-election violence I spoke about, combined with the immigrant population. So in Kenya, the way things work is that people immigrate from rural areas to urban centers. Then they work and send money home. That sort of led to adoption of mobile money. So you have every single corner of the country, everyone has access to digital finance. And that is going very well in Kenya, and M-Pesa and mobile money in general has been sort of like the rails through which everyone has leapfrogged into digital finance. But now crypto is coming in with the passing of the VASP bill in Kenya sometime last year. So crypto and blockchain now will provide the cargo for this particular race that will allow Kenyans to now be able to access global markets. So it's an interesting time in Kenya, and I'm looking forward to discussing more about that.
It's very interesting, Peter. Thank you very much. I think what you're describing is really kind of an evolution in a domestic setting, which is really, really exciting between the urban and let's say the countryside or the rural areas, and perhaps also around immigration or migration patterns as well, and how this all plays together. But I figured maybe Shelley, although you come in from a South African perspective, maybe you can help to provide some perspective on Africa as a whole. I can imagine in each country where mobile money takes off, there might be some internal dynamics, just as Peter described. But what about kind of, the continental development when we look at financial infrastructure? How do you see that happening?
Yeah, I think very interesting. The story that Peter tells is exactly it. It's an example of how payments in Africa is different to elsewhere in the world. I think I spent a fair amount of time working for companies in Europe, and there the conversation is very different. Innovation revolves around innovating traditional banking rails, modernizing them, making traditional rails faster, more efficient, more real time. Whereas in Africa, it's been largely about the lack of traditional rails and bank accounts specifically. So really we've been forced in Africa to adopt other mechanisms of innovation, specifically to give access to people to move money more broadly. So in Europe, it's all about, let's redefine what banking solutions really mean, make them more modern, make them more exciting. In Africa, it's really more about solving actual real problems. So you're seeing a lot more innovation around, things that leapfrog, as Peter said, leapfrogs traditional banking that doesn't rely on traditional banking rails to make it work. And for that reason, you're also seeing these different innovation players working together and really strengthening the offers that we provide to customers, both retail and institutional, I would say. For me, the real innovation at this point is how these layers are being connected. So generally speaking, interoperability is a problem. You spoke about the larger continental problem. I think technology is not a problem so much in Africa. There's a lot of innovation happening, a very healthy fintech ecosystem. But the real problem is how these different systems interoperate with each other. The real struggle is still cross-border money movement, of which there are many. As Peter said, the migrant worker situation is real. People need to send money to and from South Africa and other areas, even globally, and that remains expensive and very difficult to do. So that, I would say, is the larger problem. But definitely innovation looks different in Africa to the way it looks elsewhere, which also makes it exciting, and I think we'll probably get into that a little bit more. But yeah, that's what we're observing. Of course, in South Africa, it's slightly different. We are heavily banked, but again, always cross-border money movement, the fee structures, the cost of it, the time that it takes to get money somewhere else is still very prohibitive.
It's very interesting. Of course, one of the reasons why we have this particular episode today is because by the time this comes out, we will have announced our integration with Onafriq, which of course enables people in countries like Kenya or Nigeria and some other countries to use their mobile money to on-ramp into crypto. Crypto being Bitcoin or a US dollar pegged stablecoin or tokenized gold for that matter. Which is interesting, and it actually leads me to some other questions which I'll ask in a minute. But just for some context, I was looking up some context, and in Africa we're talking about more than 1 billion registered mobile money accounts, over $1 trillion, I think, per year in transaction value. In Kenya, for example, what I found was that there's more than 90% of mobile money penetration. It's very high. I don't know if that's really an accurate number, but that's very high. It must be higher than the banks, right? Yeah.
Accurate, yes.
Right, and then, what's special about working with Onafriq would be that they're active in like 40 plus countries. They say that they connect 1 billion mobile money wallets. So again, these are their numbers. That's a pretty impressive number. And for us, it's really about providing or making it possible for people with mobile money to come into the crypto space and either to invest into these global markets such as Bitcoin or tokenized gold, or perhaps to move out of their currency. And that's kind of the thing that I wanted to address a little bit as well, because even if you hold mobile money in Kenya, it still means you're exposed to the Kenyan shilling. And I don't know if that's a very inflationary currency or not, and the same in some other countries. Nigeria, we know for sure that the Nigerian naira is very inflationary. So it's on the one hand, it's about payments, but if you're paying each other, with a highly inflationary currency, you still probably want to think about your treasury strategy, and maybe you don't, right? Or your personal savings or your household savings. So I think for us, what VALR is able to offer to the African population is, for us, it looks like an on-ramp, but for many people, it's an off-ramp into something else.
Access, right? Yeah.
Yeah, access to at least the option to hold your money in a different way. It may not be much more efficient to pay each other with USDC as opposed to using M-Pesa for mobile money payments. Like maybe that's not the innovation, but rather what you hold and if you're able to store value. So I don't know if we can weave that into this conversation, but I'd like to put it a little bit in the context of what is crypto really about. It's not just about the speculation, of course. Maybe Peter,
Yes.
You've done so already a little bit. Maybe you can walk us a little bit more through the payments landscape in Kenya. You've you've hinted at least already, how it's a bit more difficult with traditional banking. But maybe you can add a perspective on, what does the Kenyan shilling really represent for people? And maybe it's a very trusted currency, maybe it's a stable currency, I don't know. So how does the US dollar pegged stablecoin story fit into that as well? Maybe you can elaborate on that a little bit.
Fantastic. So Kenyan people, Africans generally, we are very practical people, and the way we have come to adopt stablecoins and crypto has been in such a manner to solve challenges and problems that we are currently encountering. And the first and the most important use case for stablecoins that we've observed in Kenya and Africa has been inflation hedging. So, before, especially as an individual or a small business, it was very difficult for you to sort of even open a US dollar account, walk into a bank and buy some dollars and be able to hold it there. It was a challenge. It's not something that was possible. And even for the businesses that could do it, they would have to go and line up in a bank for an hour or so to be able to try and get a good rate and do that. And therefore, the most important and the first use case I've observed in Kenya and Africa in general has been inflation hedging. So people on-ramped into stable coins to protect themselves from inflation. In Kenya, about 2-3 years ago, actually, we had a serious dollar shortage in the market. The Kenya shilling was losing value. I remember in just 1 week, it lost about 20% of its value. And then that's when especially the young college-educated young professionals discovered stablecoins, and they realized it was easier for them to, on-ramp into stablecoins to protect themselves from inflation so that they don't lose the value of their currency. So I think in the last year or so, our currency has been a bit stable, the Kenya shilling. But right now, I think most of the people, and about 5 million crypto users in Kenya, know that if such a situation should ever happen, they can have easy access to dollar-pegged stablecoins. Then the second most important use case that I've observed in Kenya and Africa has been for cross-border payments. And my best story that I usually like to give is for someone I know. They run a pharmacy company here in Kenya. They have several pharmaceutical outlets across the country. So that particular person imports most of his pharmaceutical and medical products from China and India. So before, I met him, the way he used to pay for these imports is that he would go to a bank for about an hour. So he has to stop whatever he's doing, go for a bank to negotiate for a good rate for about an hour, and then make that payment to his suppliers in India and China, which will take about 5 days. In between, they would have all this conversation with his suppliers about, has the payment arrived, when are you releasing my goods and stuff like that. But then I introduced this particular person to stablecoins, and now they're able to make that payment within 30 minutes. So they on-ramp into stablecoins and they make that payment. So the process has been so smooth and so good. There's no chance that that person will go back to traditional forms of payment. And so that has been fantastic. That has been the second most important use case for stablecoins that I've observed in Kenya and across Africa. And then the third one that is currently emerging, and it's emerging because of the regulation efforts that are happening in the market. So for instance, in Kenya, in November last year, the government passed the crypto bill. It's now an act. And now we are in the process of actually operationalizing the particular bill. And so what is happening is that more and more individuals are becoming more confident. They're gaining more trust in making investments on the blockchain. So the third most important use case that's coming up is on investment. So Africans, Kenyans, Africans in general have gained access to international markets. Right now, I can be able to own a Google stock, a Facebook stock, just sitting at my home right now. Before in Kenya, for instance, to just even own a Kenyan stock, you have to go and open several accounts. And if you're lucky, maybe they open that particular trading account within a month. That is if you're lucky. Oftentimes, you'll not hear back from them. But right now, people are able to invest in all of this stock in America and everywhere else. So we've gained access to the global markets. That is the third most important use case that's coming up in Africa, in that Africans have gained access to the global markets. And also in our countries, in Kenya and Africa in general, we have a lot of young people who are gig workers. So they work remotely, software engineers, designers, interpreters. Some of them are teaching local African languages to people in Europe. So they are now getting paid via stablecoins. So before that, they would have to go and open a US dollar account, tough. Some of them were using other services and they would get their accounts blocked. But now stablecoins are now opened all of us to the global market. So in Africa, again, we've been able to sort of leapfrog into the global market, and now we are able to participate into that. And for me, speaking for myself, just recently when one of the biggest stablecoin issuers, Circle, when they released their stock, I realized I can now participate. Same like someone in America who went and bought some Circle stock. Myself here in Kenya, in a small corner of Africa, I'm able to participate in that particular economy. So now this is opening up Africans to participating in the global financial ecosystem. So those three use cases are very important, is what I'm saying. And I think this will help Africa move on into the next stage of how we employ our youth, how we do our economic growth planning, and so on. And mobile money has played a big part of that, especially in Kenya, because mobile money was the rail that showed most of us that it's possible for you to participate in formal economies, in formal economic activities. So it has been the rail, and now crypto and blockchain now is the cargo that now is going to leapfrog Africans into the next stage of economic growth. And I think governments in Africa, especially in Kenya, they've been able to recognize that. And that's why they are building regulations that will facilitate this. And I think this should be able to contribute about up to 10% in economic growth in most of these countries. In Kenya, you have about 70% of the population that are very young people who are out there looking for jobs. Right now, you can be able to work remotely for any company in US, outside of in Japan, in Brazil, in Argentina. And I'm speaking about people that I know who work for companies in Argentina, offering legal advice or language training or software development, and they're getting paid. And these are young people living in rural areas in Africa. So I think this is a massive step, and all of this I think is possible because of the role mobile money played. But right now, crypto is coming in to take it to the next level.
So it's very fascinating, right? It's the idea So you bought some Circle stock. Of course, Circle took a bit of a hit recently due to policy outcomes in the US, which is interesting if you think about it, right? That there's some domestic policy that then has such an influence on, in this case, global holders of Circle stock. But it also makes me think, let's say we fast forward a few years, maybe Kenyan market, Johannesburg stock market also comes on chain and enables people in the US or wherever they are in Europe or in Argentina to invest in emerging markets or African markets or developed nations where usually they wouldn't have access to the stock markets before. It's very interesting intermingling of investment that's kind of unfolding. The question that I had for Shelley, it's going to deviate a little bit from what I had planned to ask you, but when you hear of these issues, right, like cross-border payments, that's difficult, or even just global participation in global markets, you could say, oh wow, now the technology is enabling for that. But the reality is, of course, that for a long time, technology could have enabled for that. And I'm wondering, why do you think that has not been the case? Why have cross-border payments been and continue to be so difficult? And why is it so difficult for various populations to participate in global markets?
So you're 100% right. I think the technology is not the problem at all. As I think I mentioned this before, I think the technology has been there before, has been there for a while. The interesting conversation, again, just back to Europe and the US, the conversation obviously is, okay, here's this great technology, what can we do with it? And there really isn't a problem to solve. I think that's what what markets are waiting for, is we've got this great technology, but there needs to be a certain utility to it. However, in Africa, I would say the biggest problem is actually the fragmented nature of it, of the markets itself, not so much the technology, but the markets are hugely fragmented in the sense that we're dealing with every country with its own regulation, its own regulator, its own currency controls, and all of the limitations that comes with that, and also the maturity of its banking rails and or mobile money rails, right? So right now you're sort of competing within countries to try and get some sort of interoperability going so that people can actually access this in a uniform way. So again, the technology is there, but we're still facing the regulatory overhead that is not uniform across the different countries, and we're really looking to the regulators to bring in the appropriate level of governance to make sure that the industry can grow. And it is more mature in certain countries than others. As Peter mentioned, Kenya is making great strides in terms of formalizing that, but in other countries it's not so much, and therefore it means that the use of stablecoins is more limited elsewhere than it might be in Kenya. We as VALR certainly will be at the forefront of this, exploiting wherever we see regulation unfolding. But yeah, we need that interoperability exist across the continent for it to be really, really fruitful and for the technology to be used across the board.
So that's cool. I'm going to ask you a completely different question.
Sure.
I was very surprised. This was a couple of years ago, and I was... I've been very bullish on Bitcoin for a long time, but at that time I was quite single-minded in my Bitcoin focus, and I was very surprised to find out that in South America the kind of primary store of value was actually USDT. And yes, you have countries, in Venezuela, Bitcoin adoption actually took off like 10 years ago quite strongly. But across South America, it was really USDT that was the big deal. It's like because the US dollar had such a strong reputation. And I can imagine across African countries, if you're dealing with an inflationary currency, Zimbabwe dollar or Nigerian naira, of course, US dollar stablecoins are very interesting.
Yes.
But if you go into the kind of Bitcoin discourse related to the US or even Europe, they would say, okay, these are also, these currencies also don't have a long, bright future, because they would, maybe emphasize that there's a lot of money printing. Now interest rates, are up, but let's say they eventually will go down again. And so Bitcoin or gold become the preferred stores of value. I'm just curious in Africa. Okay, so we know mobile money, it's pegged to the kind of the fiat currency space. Then, okay, wonderful, people get access to US dollar stablecoins. Maybe it's an improvement in terms of store value. There's some consolidation around the US dollar happening, surprisingly. This may be just your personal views, but like how in and across Africa, how do other stores of value, alternative stores of value, such as Bitcoin, tokenized gold, or perhaps the tokenized S&P 500, which we also offer on VALR in the form of an X stock, how do these feature in the savings strategies or mindset of your everyday folk? Both of you can have your view. Just curious more from a localized continental perspective.
Yeah, I think I'll go first.
Very
So,
interesting question.
yeah, in markets like Kenya especially, the largest store of value is land. So whenever someone gets a little bit of money, they go and buy land. So we call it land banking. So that's how we store our money. But now we are having other digital products like Bitcoin. But before we get to a point where people are buying this as their store value, it will take a lot of trust building. And what this requires is definitely that the crypto bill is properly operationalized in Kenya and in various markets in Africa in order to allow adoption, because then it will lead to institutional adoption. So banks will take it up, the MNOs, the providers of mobile money will take it up, and then security exchanges as well, like the Nairobi Securities Exchange will take it up. And so the future that I foresee in Africa is that in the future people will be able to buy their Bitcoin or other tokenized assets from what we call traditional financial institutions at the moment. So they'll be buying this or hearing about this from their banks. They'll be hearing about this from the security exchanges. Of course, VALR will be way ahead. By that time, there will be marketing. So the most important thing that we'll need to do is to do user education. So financial literacy will need to be done very, very properly. And I think in markets like Kenya, we've done that very well when it comes to mobile banking and mobile payments, mobile money. It's been done fantastic. And so once we get to a point where we've built trust, where individuals can see this is something that I can put my money in, I understand the risks, I understand the benefits, then adoption will explode. And then people will discover that in addition to land, it's possible for me to invest my money in Bitcoin or other virtual assets. And of course, the other thing that is likely to happen in Africa, and I think Kenya will lead in that, will be the tokenization of local stocks. So in the future, it will be you, Ben and Shelley, buying Kenyan stocks right on the blockchain. And also the way the government will be raising money for particular projects here in Kenya will change. So before they were probably selling their bonds to Kenyans. We buy them the traditional way. In the future, I foresee the situation where they will be tokenized. And so the user education in the market, I think, will get to everyone. People will discover, there are other ways in which I can store my money, probably grow it in the future. But that will require that we do proper user education. And also it will require that we help the various institutions like banks and securities exchange adopt the various frameworks and infrastructure that we've built very well here in VALR, to enable for them to provide these tokenized stocks and Bitcoin to their users. And then at that point, I think it will scale very fast. And I think Africa we might probably end up being bigger than Europe. So, and a part of the reason is because the way we'll solve our problems. We have people in countries like Sudan, Somalia, who don't have functioning stock exchanges. So they do not have the capacity or capability to invest in stocks, for instance. But I think once all of this goes onto the blockchain, they'll have access to this, and we will come big, like the way we've done with mobile payments. But that will take me and you, Ben, and Shelley, educating the institutions, educating the government, and the public in general.
Interesting. What are your views, Shelley, on stores of value, whether it's in South Africa or Africa as a whole?
Yeah, I mean, maybe a little lens on South Africa, or maybe taking it back to South America that you were talking about. I think why US dollar pegged currencies are popular there is for exactly the reason that Peter was talking. The use case is hedging against currency fluctuation. So I think that's why, customers or people in Latin America were more drawn to those pegged to the dollar, and they were very used to an economy that quoted everything in dollar and therefore also very aware of the devaluation of their currency when it happened. So I think that's why that trend emerged there, and I think Bitcoin kind of was a little bit representative of the fatigue against that devaluation. In South Africa, I would say, Bitcoin and other cryptocurrencies are already very well known, and to Peter's earlier point, I think a very effective way of exposing people to it, retail customers to it, is by wrapping it into something that they already know. South Africa, banking is well matured and access to banking is huge. Many of the banks offer you the opportunity to invest in cryptocurrencies as part of your online banking app. So I absolutely agree with that. If you have a trusted institution offering you something, it really adds to the credibility of that new financial system. And that's certainly something that we should take into the rest of Africa. I think it will look a little bit different in the countries where mobile money is proliferated. There it's more likely that the mobile money operators might adopt it and offer it, or put a wrapper around a crypto solution and give access to customers to it. I don't know if the banks will take that step necessarily or will have much success with it if we just look at the adoption of banking, traditional banking in those countries. But certainly what I see is that the fact that we've already seen so many digital solutions emerge in Africa means that it's ripe for that transformation to happen, to see more innovation and interesting ways of surfacing value to customers in that sense. What I will say about sort of store of value, I think the success of stablecoin has less to do with store of value and more to do with the movement of money. So it speaks to the utility, and I think in Africa, also to Peter's point, it's more about solving problems necessarily than just thinking about which store of value to employ. I think it's really about how can you take your money and make the best out of it, and often that is by how effective you can move it, how efficiently you can access it once you've converted to it. So it will be interesting to see what emerges there, but again, less about the speculative nature, I would say, trading and the like, and a lot more about solving real problems and giving people access to alternative sources of wealth management and building.
It's actually fascinating. As you were speaking, I was just checking out an old article I wrote in 2021, and I came up with this idea. It never picked up, but I came up with this idea of inverse tokenization. And what I mean by that is now we're still in the phase where we're tokenizing real-world assets. For example, gold, we tokenize it, and then we have a crypto representative token for that. But maybe in the future, perhaps if and when fiat currencies fall out of favor, and instead people are interested, to hold a native asset like Bitcoin, you might see the likes of mobile money operators tokenizing the digital asset, and so perhaps it'll come true. When you were talking about it, it's like, all right, maybe in a few years.
Interesting view.
Interesting
like
view,
it.
right? Let's see if it happens.
It's possible.
It's possible, you don't know. Maybe, the idea with Bitcoin is that ultimately adoption reaches such a stage that actually it stabilizes. But of course, its value would be, multiples from where it is now, and perhaps as it stabilizes, it becomes deflationary, perhaps. That would be a great thing. People would rather pay each other in Bitcoin than with something that inflates over time.
Yes.
We're not there yet. But gold, again, if it's very easy for you to spend gold and hold gold like that in tokenized form, that's actually very attractive, isn't it?
Yeah, for sure.
Right now I'm in Hong Kong. Hong Kong has a very good access to the global financial system, and the Hong Kong dollar is pegged to the US dollar. But in Vietnam, where I also spend a lot of time, over the past few months, every single day, you see hundreds of people lining up outside of these gold stores where people buy these gold rings. Yeah. And these rings are just packed in plastic. And the idea is you shouldn't open it. You keep it intact and you store it. So gold is a major store of value, as is land. Do you see similar dynamics in Kenya, for example? Are people stocking up on gold, or is it less of a prevalent thing there?
Actually, the people stock up on gold and use it as a form of, store of value are refugees. So, but ordinary Kenyans don't do it. So refugees that are crossing borders, oftentimes they would sell their property and convert it into gold in a format that they can hide. So in most of those refugee communities, you'll find they have gold chains and all that kind of stuff. They're the ones who have really adopted gold because for them, this is the best and the easiest way to travel with value across borders. But I think in the future, as they come across Bitcoin and tokenized gold, maybe that might change. Yeah, so in Kenya, gold is not really that much highly adopted, other than a couple of people wearing it as jewelry.
Of course. That's very interesting. Of course, if you're a refugee and you have to go across borders, it's easier to hold Bitcoin, so to speak, or a stable coin for that matter, than actual physical gold. I can imagine there's some serious risk there.
Yes.
There many people talk about that, right? Bitcoin as a replacement of gold.
Yeah.
So
Yeah,
very
absolutely.
interesting line of thought to that. Yes. I think the way that I think about it always is more utility. The ordinary man in the street cares less about I recently attended a conference and we were talking about this, I don't know that consumers always care if it comes to money movement and payments. I don't know that they really care about the technology or the infrastructure below it. So we as operators in the industry have to be careful, to your point, Peter, about education. They don't care about what moves that money as long as it can do it quickly, efficiently, and at low cost, right? So we often have these debates about which player will win, which technology will emerge, and who's going to be the leader in the space. I don't think it really matters. My personal view is that it will be a hybrid, interoperable, multi-layered structure. But for consumers, it doesn't matter as long as we as players are able to connect them all together so that we get this efficiency, speed, and low cost that the consumers in Africa specifically are looking for.
Yeah, absolutely. Maybe even though the technology doesn't matter too much, maybe Shelley.
Matters to us, though, right?
It matters to us.
It matters to us.
But maybe because you're so involved in this Onafriq integration, maybe you can speak a little bit. By the time this podcast comes out, let's assume it's in operation, people have access. Maybe you can elaborate a little bit on this from a practical point of view. Like, what does it actually mean, whether you're in Kenya or Nigeria or one of the other countries?
Yeah, I mean, very simply, and it really is as simple as I'll describe it. It allows our Kenyan customers and elsewhere, wherever we are active in the countries that are supported by our provider Onafriq, customers are able to connect their mobile money wallets into the VALR platform directly. So they're able to bring mobile money onto the platform. What we do is we convert it immediately to a stable coin of their choice, USDT or USDC. And they are then from there able to hold that currency, to convert it or to trade and access other rails via that currency that they've bought from us. So really as simple as that. It's a couple of clicks. They verify with their mobile money connected number and the currency is available to them, as is all of the functionality that is available on the VALR platform as well. And as you know, we are a centralized exchange, so everything that goes with that becomes available to them. What is really powerful about that is previously they would need a bank account or a credit card or some other expensive, SWIFT payment to deposit into their VALR account. Now it becomes possible for them to use a local, well-trusted, used everyday mechanism to bring local currency onto the platform.
But very specifically, because I don't know enough about it, does somebody, whether it's in Kenya or elsewhere, do they need to have some type of account with Onafriq? Or do they just have M-Pesa and they can just come and...
No, they only need to use M-Pesa. Onafriq is an aggregator, so they have integrations directly with the mobile money operators. So they use the infrastructure provided by mobile money operators to validate and do the checks and balances on the account, much as a credit card processor would do, integrating with different credit card processors. They aggregate the service so that you can access it via a single rail, no matter which country you're in or which mobile money operator you're part of. So super
So this
easy
is-
for the customer, and we do everything in the background between ourselves and Onafriq to make it possible.
So this is actually a good example of where the technology behind it really doesn't
Yes.
bother the user.
Doesn't
that much.
matter. Yes.
You have M-Pesa, you want to get some Bitcoin, here you go to VALR and
Yeah.
done.
Yeah, and the beauty
Okay.
of it is it looks like any other payment they would make using mobile money. I think Onafriq is also a well-known provider, so even their experience of it will be familiar. So yeah, really the easiest possible way that you could think of bringing money onto the platform.
Beautiful. In these last few minutes of this episode, which went by really fast,
Indeed.
let us be optimistic and visionary and aspirational, and kind of courageous in what we do imagine. Perhaps Peter, you could start, your vision beyond Kenya, just your vision for how you think. I think we can look at Africa as a whole, but you can even talk to the world. It's fine. But how do you think the financial system will evolve actually over the next 5 to 10 years? Let's say 10 years, make it more impactful.
Yes, so in the next 10 years, I think as I mentioned at the beginning, is that mobile money laid the proper rails for, Africans to participate in their local economies. But right now, crypto and blockchain is now the cargo. So in the next 10 years, Africans will be able to properly participate in the global economy, in the global markets. So the same financial tools, products that someone in New York has access to, we people in Africa will also have the same access. So I will not need to travel to the US, the UK, to be able to sort of have the same level of investment that they have. I'll be able to sort of have access to that somewhere in my village, here in Kenya, here in Africa. And part of that also will be as a result of the penetration of internet connectivity. So I know companies like Starlink are coming in, and people who initially didn't have access to internet in very remote areas will have access to internet. And so they will discover all these financial products that were initially only available to very well educated people who have traveled the world, and definitely people in the western part of the world. We will now have access to this. So Africans will be able to participate properly in the global economy. Young people will come up with new forms of jobs. The gig worker economy, especially people who work remotely, will spread a lot, and a lot of Africans will get access to employment. They'll be able to earn in whichever currency they choose. They'll be able to earn in dollars if they want, if that's what they want, in euros if that's what they want. And there's a lot of young talent here in Africa. I think about 70% of our population is young people who are searching for jobs. So the next 10 years will be very interesting, and the companies that will properly position themselves will be able to participate in this. So someone in South Africa should be able to buy stocks here in Kenya of the best company they like, and vice versa. I should be able to buy the stock of the best company in South Africa. I should have easier access to the rand if I want to, and should be able to send money across the border the easiest way possible. So I think this will be a massive economic growth opportunity for Africa, but only for countries that will position themselves accordingly, pass the proper laws, learn the best practices from the rest of the markets, and then definitely we'll be able to easily import medical products from the markets where we mostly import them here in Africa. Most of our medical products come from China and India. So right now it will be easier. You just using stable coins here and make payment for that and be able to receive it within our markets within a week or less. And that will be simply because of the rails that we will build on top of the blockchains. I also foresee companies like VALR becoming as big as the biggest banks and financial institutions in the world, because we are better positioned to provide our infrastructure to banks, to securities exchanges, pretty much to big business cross-border payments, manufacturers who may want to participate in the global economy very easily. So it's a massive opportunity, especially for the young population in Africa here in the next 10 years. So expect to see massive personal financial growth for a lot of young people and businesses and fintech companies in Africa. I expect them to now go global. So it's a wonderful dream that's coming up in the next 10 years. And I'm really glad that I'm actively in the center of it, participating and making it possible for millions of people in Africa.
Thank you. Shelley as well, please, your vision.
I'll localize a little bit more to payments specifically, because I think, to sort of sketch a larger picture is very, very ambitious. I think in terms of payments in the next 10 years, I think Africa is perfectly positioned to take advantage of the fact that we are already well penetrated in non-bank related financial systems, which is super exciting. To Peter's point, I think what we need to establish over the next 10 years is this interoperability factor within Africa, but also beyond. I agree with Peter, it needs to become a global world, but that means consistent regulations. It means interoperability of systems. I think that there's a space for all players. I think we will continue to see banks and mobile money operators and others that are active in this ecosystem active in the future as well. But I definitely see an interoperability and interconnectedness that doesn't exist today. I agree that players such as ourselves are perfectly positioned to become an infrastructure layer that makes available the very efficient and quick and cost-efficient option in terms of moving value around, but those still to be wrapped into solutions that are offered to customers that they trust and that they're used to using. But certainly the interoperability and the ability to transact and move money globally is something that I think that we will see over the coming years. I definitely agree that digital money will be more prevalent. I'm not convinced that we'll see the end of cash and actual local currencies. For that, we need a lot more than 10 years probably, but certainly the idea of giving access to people in emerging markets in the same way as our global economies have is something that I foresee and find super, super interesting as well. And very happy to be part of the journey as well.
It's very cool, you know, this podcast called VALR Unfiltered. And then money, meaning, and society. And I always like to think about what's the impact on society ultimately.
Yeah.
And some of it is hinted at by Peter as well when he talks about rural urban kind of dichotomies that may or may not be real. But you know, for me personally, if I allow myself to think optimistically, you know, I don't think human beings really want to live in big, crazy urban centers. Actually, I don't think it's very good for the human being.
No, I agree. Totally agree.
Right?
I certainly don't.
Right, whether it's from an environmental point of view or just like the air quality or just the amount of noise that you're exposed to. And so let's say if payments become truly global and seamless, and let's say, you know, some people are not suffering under a completely broken fiat currency, but perhaps have access to a better one or alternative stores of value. And let's say that AI takes off even more and starts to free up time, put optimistically, for people not to be, basically freed up time. So let's say the menial stuff is taken over by AI. I don't know. My view of the future is really optimistic. I can imagine people go back into the rural areas, although these are high-tech rural areas, and
Yes.
enjoy planting flowers and doing some creative work for somebody around, you know, for a client somewhere else in the world. Maybe it's utopian, but I like to think that that's kind of what we're building towards, a much more high-quality life for everybody in the world, which really taps, you know, where we can really tap into our beautiful qualities that we all can develop. And I think that's also what we're trying to do with VALR as an institution. You know, the whole idea that we're trying to build a financial system that reflects the oneness of humanity is a very grand picture of a very inclusive, empowering system that kind of fosters human dignity. So I hope we can bring that message across, not just in this podcast, but just in our general branding as well and growth. I want to thank you both very much for this conversation. We have done pretty much exactly an hour, so that's wonderful. As we come to a close, please don't hang up. And with that, I really want to thank you for this wonderful conversation.
Thank you for having us.
Thank you.
Great.
Thank you so much.
Great to chat to you today.
Thank you very much. Bye-bye.
Bye.
All right. Bye-bye.